Good afternoon, traders and investors. Will back here with another one, coming to you with a weekly market recap. I haven't seen you guys in a while, so hopefully you had a beautiful end to the week in the markets trading and investing, and also that you're off to a very beautiful start to the weekend as well. Now, in terms of the Friday session, guys, well, unfortunately, we capped off the week with a red day, the SPY and the QQQs ending in the red, and unfortunately as well, this is now the second red week in a row on both of those indexes, the SPY and the QQQs. Now, there's a few things to recap over the course of this past week. Front and center, of course, are the rising and escalating tensions continuously between Iran and Israel, with a kicker, an X factor of, is the US actually going to physically join the fight in a more direct fashion? We got a news article here that we're going to cover in a few moments on the channel right now, and as well, other tensions, but this time between the administration and the Federal Reserve. You obviously know that we had the Federal Reserve interest rate decision on Wednesday, in which we saw Jerome Powell once again hold rates steady. That, of course, brought some concerns from the Trump administration, with Trump insulting Powell again. And however, another Fed official coming into the session on Friday saying that, you know what, possibly it may actually be time to lower interest rates in July, taking an opposite stance to some of his fellow Federal Reserve members. So today's video, guys, we got a few things to recap because I haven't seen you guys since the Monday session. So we're going to go through a lot of things this week, with the tensions between Iran and Israel, and some of the tensions in light of the fact that the Fed is refusing to drop interest rates, and now that we're heading into 2 red weeks in a row. Is it a time to buy stocks? Is it a time to buy indexes? And if so, which stocks and which sectors should we be looking at first, of course? So in today's video, we're going to tackle, number one, go through those 2 news events. Number one, the developments between Iran and Israel. Number 2, recap what exactly happened during the Federal Reserve meeting, in which they gave us a summary of economic projections, which looked a little bit worse this quarter than when they previously gave it to us back in March. Thereafter, we're going to get into our technical analysis rundown of all our major indexes, followed by most of our major big tech names as well. And thereafter, go into our biggest gainers and losers of the Friday session. To cap it all off, at the end of the video, I'll be running you guys through most of my positions that I currently have active for next week, and do a quick little recap of the recent week that we just had. It was another good week for us and our Discord members. Many wins to speak of, so I'll be recapping all that at the end. So without further ado, it should be a very fun and relatively quick video. Let's jump right into it, shall we? So the SPY and the QQQ ending red. The SPY down 0.53, the QQQ's down 0.41 on the Friday session. However, not all the market was dropping. It was really consolidated between most of the big tech names and Eli Lilly, with a special shout out to Visa and MasterCard, which were down as well. You can see a little bit of rotation here away from some of the growth stocks that have been performing very well over the past month into some of the value sectors. Moving on further, you can see that even better on the one-day relative performance, where your better performing sectors were mostly defensive in nature, and to the downside, communication services, which was largely Google and Meta to be concerned with. And overall, guys, basic materials, healthcare, technology too. On the 1 week, to cap it all off with a red week in the markets, you can see the only green sector was indeed energy, of course, as a result of the conflict between Iran and Israel. Everything else to the downside, which leads us into second week of consolidation now, with the indexes continuously getting rejected right now at the all-time high resistance. We can see the development of daily downtrends on the S&P, and possibly a rollover here of the weekly timeframes as well. But before we get into more technical analysis, guys, let's do a quick rundown of the news events that have transpired this week. And we're going to start off with the current situation between Iran and Israel, because of course this changes every single day. The conflict is now into its 9th overall day since the inception started, about pretty much 9 days ago, right? So Iran issuing a new grave warning says that US involvement in Israel conflict would be very dangerous for everybody. They issued that warning after several choice comments from President Donald Trump. Trump, who has said that the US has not been involved in the Israeli strikes thus far, has given himself 2 weeks to make the decision as to whether the US will strike on Iran. Now, the US has not been involved on strikes on Iranian territory, but one could argue that they have been tantamount in Israel's defense plan against Iranian strikes on Israeli territory. So they're not actually firing anything into Iran, but they have been a big player in terms of defense, supplying ammunition, supplying weapons, and such things of that nature. Moving on further, based on the fact that there's a substantial chance of negotiations that may or may not take place with Iran in the near future, I will make my decision whether or not to go within the next 2 weeks, said President Donald Trump just as earlier as last night on the Friday session. He said further, if there's a chance for diplomacy, the president's always going to grab it, but he's not afraid to use strength as well. This was said by White House Press Secretary Caroline Leavitt. So, of course, this is an ongoing, evolving situation, guys. It's very unfortunate, but as a whole, what are the potential impacts on the market? I gave this one on Monday, but I just want you guys to understand in terms of the last 3 times where we've had direct conflicts, warfare conflicts with direct strikes between Israel and Iran, not to sound insensitive or anything like that, but they have all resulted in buying opportunities in the end for the markets. However, the degree of buying usually starts happening after about 2-3 weeks of the ongoing conflict. So now we are in week number 2. Could there possibly be 1 or 2 more weeks in which the markets consolidate because of these tensions before we possibly have resolution? The answer is yes. So we still have to keep it on our radar, but I'm not going to get too political on the video. Of course, it's not a political channel trying to recap every single event that happens amongst between the two countries and possible US involvement as well. I'm just here to say that if we're looking for very solid companies to buy, most of these companies can get through thick and thin, whether there's international conflicts going on or not. High quality, high conviction companies and the indexes overall should be able to make it through most of these conflicts as they always have in the past. However, I'll keep you guys updated on any meaningful situations that do arise over the next 1 to 2 weeks, of course, and their impacts on the market. Now, second piece of news that we have to get into, of course, is the infamous Federal Reserve interest rate decision, or lack of interest rate decision, rather, that happened on the Wednesday session. Let's look into it. So the Fed chose to keep rates steady, but still pencils in 2 rate cuts by the end of 2025. Powell seeing meaningful inflation ahead. Let's get into the article, shall we? So this is what he had to say. No one holds these rate paths with a great deal of conviction because there's a lot of uncertainty around the tariffs. Will they be in place? Will they not be in place? And how much, of course, and what will be the impact? And everyone would agree that they're all going to be data dependent. So Powell's been saying data dependent for now the past 2 years overall, I'll remind you. Here's what he had to say further. Everyone that I know is forecasting a meaningful increase in inflation in coming months from tariffs because someone has to pay for the tariffs. Between the manufacturer, the exporter, the importer, and the retailer, Powell said. People will be trying not to be the ones who can pick up the cost. Ultimately, the cost of tariffs has to be paid, and some of it will fall on the end consumer. Now, of course, we're going to get into the dot plot here because we got the summary of economic projections, and you can see that there is still 7 Federal Reserve members that believe that there should be no rate cuts still through the end of the year, with other 7 members or 8 members down here at about the 3.7 mark. That would be roughly 2 interest rate cuts by that time. So you can see the Federal Reserve board members here are very divided on the stance of tariffs overall, which overall the markets did not like. Now, that, of course, brought some comments from President Trump, but also comments from Federal Reserve member Mr. Waller. So Trump insulting Powell again as another top Fed official joins the call to lower interest rates. Here's what they had to say further. Here's what Trump had to say first. I fully understand that my strong criticism of him, talking about Jerome Powell, makes it more difficult for him to do what he should be doing, lowering rates. But I've tried it all different ways. I've been nice, I've been neutral, and I've been nasty, and nice and neutral didn't work. That's what President Trump said. The post came the same day that Christopher Waller, who serves on the Federal Reserve Boards of Governors, said the central bank should deliver interest rate cuts as soon as July. So possibly Mr. Waller being in the camp of these guys down here. Each one of these dots is 1 Federal Reserve member, so you would expect him to be in the lower tier of that. Now, why would he be saying something like that, such as we're at a good spot right now for talking about bringing the rate down? Well, is maybe he trying to get in Trump's good graces? I'll remind you, Powell's term ends in May 2026, and Trump said he will announce his pick for Fed chair very soon, well in advance of May 2026 when that term ends. So is Mr. Waller potentially trying to get into the good graces, trying to put in his bid to be the chairman of the Federal Reserve? Quite possibly, but those comments did help lift the market a little bit in the morning on the Friday session overall. Now, the result of that meeting, guys, was not very good for the markets overall. The Fed's projections were not very good in terms of the economy, the jobs market, or inflation overall. You can see here that in the March projection, they had a GDP rate going for the end of 2025 at 1.7% expansion. That has now been penciled down to 1.4, and they even tapered back their expectations for 2026 from 1.8 down to 1.6. So economy supposedly going to be lower in terms of expansion rates than the Fed had previously anticipated. Now, the unemployment rate possibly being higher. They had penciled in 4.4 for the end of the year, now 4.5, and in 2026, also 4.5 up from 4.3. Inflation also was penciled in higher. PCE inflation, they had an estimate of 2.7. They're now thinking it to be 3.0. And the overall 2026 as well from 2.2 to 2.4. So economy down, unemployment rate up, and inflation up as well. The federal funds rate, no change here, still penciled in for 2 cuts by the end of the year. But look at this for 2026, higher, 3.6, and for 2027, higher as well. So the market is still currently now throwing a little bit of a temper tantrum because they are not getting the interest rates that they want. Everybody knows that Wall Street wants more free money in terms of lower interest rates, which does help asset prices overall. So this summary of economic projections, guys, shows that the Federal Reserve is still very timid in terms of wanting to cut rates, and that is in spite of 2 factors which would otherwise lead them to drop interest rates. GDP struggling and unemployment possibly rising would be viewed as 2 catalysts in which the Fed would want to lower interest rates to stimulate the economy. However, they also don't want to stimulate the path of inflation in doing so. So it's a push and pull scenario. As of right now, the Fed is maintaining very firm, and the market's also giving a 41% odds, the biggest probabilities of there only being 2 interest rate cuts by the end of the year. Largely, the first one is probably going to come in September. We'll see if that's the case. And then the other one supposedly penciled in for the month of October before maintaining them relatively the same by the end of the year. So this is an ongoing situation as well, and we will keep an eye on the developments there. But the market definitely not liking the fact that Powell is still being very stubborn, choosing not to drop interest rates, or rather not adjusting the path of rates. As a matter of fact, bringing it higher for the next year and possibly even 2. So those were the market moving events over the course of the week, especially the Iran and Israel situation, which has daily updates, but also the results from the Federal Reserve meeting, which happened on the Wednesday session, with further comments from Governor Waller on the Friday session overall. So with that out of the way, guys, now let's jump into our technical analysis portion of the video. So the technicals on the indexes are largely clearly showing one thing, and that is a rejection for now the last 2 weeks running from the all-time highs. If you guys want breaks from the all-time highs, guys, we're going to need some very clear situations here. We're going to need conflict resolution between Iran and Israel, and possibly no U.S. involvement. We are also going to need trade deals. I'll remind you, the deadline for the 90-day tariff pause is coming up in about 3 weeks' time, and so far we only have a framework for one deal, signed deal, between the UK and the US. There is no other signed agreements, guys. We have a handshake and verbal agreements between China and the US for some things there, but a lot of our other trading partners, guys, have not come forward with actual trade deals. So a lack of trade deals and rising tensions in the Middle East have resulted in the SPY and the QQQs not being able to breach the all-time high resistance and go into absolute greed mode. And you can even see that in terms of the fear and greed index, which is now curled down to a more neutral scenario, down from where it was in the greed section just about a few weeks ago, all the way up to a month ago when the markets were showing a clear path of expansion. Now might just be time for consolidation, and we can clearly see that with a loss of the daily uptrend, breaking the higher lows and losing the 12 EMA. Rejection from resistance and the daily downtrend means we're in a clear period of weekly consolidation. So that being said, who is in control? Still the weekly bulls. We have a lot of space here, looking for a higher low. Anything right now above 575, looking for a higher low. Good thing below us, we got a lot of support, 585 down to 575, and the EMAs. If the markets curl down into this area with the longer term bulls being in control, I still do believe that we're coming up on a very interesting series of buying opportunities for many stocks in the market. And when we go through our respective indexes, I'll show you guys which sectors I like the best and possibly talk about some of the stocks I like the best as well. Moving into the QQQs right now, which were one of your lead bulls, not yet losing the daily uptrend. We have equal lows right now at around the 525 area. The bulls, however, are still struggling with resistance. We have 2 doji candles into resistance, which could lead us to believe that we might just be due for some weekly consolidation following in the S&P's path. That being said, if we do break down right now, just keep in mind who's in control, still your weekly bulls. Anything above 501 looking for a higher low. Good thing for us, we got a lot of support down here, 512 down about 500, and you got your short-term EMAs there as well. So if we're looking for deals in tech, guys, we may have a bit more consolidation to go. So if we're looking for buys, we're not going to deploy all our capital at once. We're going to be very patient, deploy it periodically, and if we're looking to sell options in the market with possibly a rising of the VIX, you want to be targeting in around support areas on your favorite stocks or in around support areas on the indexes if that's your thing. Moving on to XLF right now. XLF also struggling. This was one of your lead bears, guys. This was the first sector to break into a daily downtrend, and that daily downtrend largely seems to be maintained. It seems as though they want to go for the lower high into possibly lower low, which would lead us into further weekly consolidation. A loss of 49.51 would be a loss of a weekly uptrend as well, and that would just plunge you into a bit of monthly consolidation, something of the XLF other than the tariff lows, of course, that has been in consolidation, guys, for a very long time, talking about the last 6 to 8 months. So I'm still very bullish on many companies in financials. Here's just a few that I'm looking or already have bought the dip on. Visa, very nice pull down after the stablecoin bill was passed, of course. Coming into support, 336 down to 326. Down there is the 200-day EMA. Very solid support area for Visa. This one is definitely an add to my long-term portfolio. I like it a lot. Same thing can be said for MasterCard. MasterCard coming down into daily oversold conditions, which is very rare for this company overall. And we're also coming into the 200-day EMA plus support, 532 down to 517. All that is confluence. Support, 200-day EMA, and daily oversold conditions could mean that MasterCard is a very decent add to any long-term portfolio right now, and maybe even good for a swing trade. I actually started a swing trade on this one on Friday. I'll show you that towards the end of the video. Those are some of my favorite ones, and special shout out to Berkshire as well. Down here, the 483 to 470 range with the 200-day EMA seems to be like a great opportunity for some swing trades as well on this company that very rarely goes into 7, 8, 9 weeks of weekly consolidation in a row. On to healthcare right now. Healthcare continues to struggle. We were noticing that the bulls had a very nice leg of expansion underway, and now it is being tested, guys. We have equal lows right here, roughly at about the 132.5 mark. If you lose that, unfortunately, you lost the daily uptrend, opens up the door for the bears to do something like that. And unfortunately, as of right now, well, the bulls, right, they had a very nice bounce. This is a 786 bounce on the fibs. If you want me to put the fibs on that, just so you guys can see, almost a 786 bounce. Very nice. But if we get more consolidation, guys, the bears have the capacity to start testing some of these lows again. The bulls are looking for the trend change. It's still to be seen. Can they get it? I'm a big fan of playing healthcare, but we need to take this sector very slowly. Why? Because we don't have the higher time frames. It is still a monthly downtrend. Yes, indeed, it's into support of the last 2, 3, 4 years. At this point in time, this is an area where we can be building positions, but we can't necessarily say that this is the absolute bottom on healthcare just yet. So any positions that we're building, you need to build them over time, and you need to build them relatively slow. Moving on to SMH. SMH was another one of our lead bulls, holding near the highs very nicely. The daily higher lows right here, 256. No new highs. If you break this low into next week, it will be your first daily downtrend on semiconductors since this entire rally started. That being said, we have now closed above the support range, 260 down to 247. But even if we lose this, guys, who is in control of this chart? It is clearly your weekly bulls. Anything right now above 235, looking for a weekly higher low for possibly a recapture of that uptrend overall. So I will be looking on some of my favorite semiconductor names. If we get some weakness, possibly for some swing trades, some names that come to mind. The other ones we'll cover later on in the video. But if we get a bit of a dip here on ASML back down to the low 700s, maybe looking to add some shares as well. That's one company. I'll remind you as well. Micron is another one. They have earnings. If Micron re-dips into this area, 110 out of 100, that could be a beautiful breakout, retest, and possibly run setup for this stock. The other semiconductor names, such as AMD and NVIDIA and TSM, I'll cover later on in the video. These are just a few names that I'm looking at in this sector overall. Moving on to the Russell right now. The Russell down about 0.21, and the Russell as well, flirting with a possible daily downtrend. A break of 208 would do it for the bears, and we are rejecting right now from a big area of weekly resistance. That's 217 down to 208. Very hotly contested area. This was support. This was resistance. This is support as well, and now acting as resistance for the markets, unfortunately. So if you do move a little bit lower, the higher lows are down here. 200 psychological, that would be looking for a weekly higher low for possibly a second attempt at the resistance range. Growth is not my favorite sector to invest in right now. This one really needs a clearer path to interest rate declines to really get the lift that people have been anticipating on the Russell. I mean, look at the SPY and the QQQ, right? They've recaptured almost all of the drops. However, the Russell is the one, other than healthcare, of course, is the one that's been lagging the most behind because the environment right now isn't the clearest path, especially for somewhat unprofitable growth stocks. Now let's take a look at some of our minor sectors, shall we? So XLP, consumer defensives, this could be one. If growth is going to be the catalyst for a pullback for the markets, maybe we get a bit of rotation now into our XLP consumer staples and defensives coming into the 200-day EMA and support around 81 down to about 79.5. So it's looking quite good here, guys. Very nice base of support is being formed. Might just be looking for the weekly uptrend shift if there is a significant rotation from growth towards value, as we have been seeing. This one is definitely on my radar, and it is probably ripe for a swing trade. Stop loss will go down below there, and you're charting expansion towards the all-time highs. Keep that in mind. Moving on to utilities, possibly the same concept. Utilities has also been forming a very nice base of support down here. 80 bucks down to about $79, that $1 range. Beautiful chart right now, guys. This is a bull flag of accumulation, in my opinion. Accumulation at the higher levels after breaking one very big resistance range, now acting as support. EMAs acting as support below us as well. Could just be looking for a little bit of expansion to the upside. Real estate is actually an interesting one too. Weekly uptrend is very nice with a huge line of defense below us. 41.36 down to 39 is that massive level of support. You see it best on the monthly, guys, right? Just maybe accumulating here, possibly looking for the break. Shout out to the home builders. I know that the real estate market has not been easy right now. This is also one that if we're looking to build a position, if you are of the opinion that there is going to be no recession and that the Fed is indeed going to drop interest rates faster than the path has indicated so far, this might be a trade for that thesis. Coming right now down into 87 to 81 is the home builders construction ETF, right? Not looking bad. And the 50 EMA, the 50 EMA on the monthly time frame is rarely tested. When it is, it's usually a good opportunity. This is also a 5-year trend line and also coming into our previous area of resistance, which should now be support. That is what I like to call confluence, a nice area to be building a possible position, but it may move slow. And keep in mind, it is a thesis, right? If there is a recession, if potentially the housing market does not get that push from consumers coming back into it over the next 6 to 9 months, this trade may take longer than expected. So it all relies on that thesis. Now moving into energy, we know that energy has been getting a significant boost because of oil prices going up, as rising tensions in the Middle East always do bring those oil prices up. Now attacking the range of resistance. Any move lower, guys, might just be looking for a higher low. Some of the names that I might be interested in playing for some short puts under the market is CVX on a back test of the whole 144 down to 130. Back test, I'd like to write short puts down below in this, 2-3 year range at this point. Another one of that same sort is XOM, right? If XOM retests here, it's a nice weekly uptrend expansion right now. If you give me a back test, I might be looking to sell some puts down here in the lower $100 mark. If ever the conflict is resolved and oil tends to drop a bit, and the oil companies as well, maybe looking pretty for a retest of those zones. That is everything we had for a quick little recap there. In terms of the VIX, well, the VIX has been all over the place this week with the FOMC, the Iran-Israel situation and everything. I would be looking for some expansion. If the tensions mount and there is more uncertainty in the markets as a result, you can expect the VIX to maybe start attacking the mid 20 point range. That'll be very good for selling options in the market. Not so much for buying options, but selling options might just be a little bit juicier here coming in the next few weeks. The dollar is still struggling, guys. We're still on the watch, right, for the eventual breakdown. You remember when we tackled this area right here, I had this arrow on the chart this entire time, a backtest of resistance, 101 up to about 102.75. And as a matter of fact, now we are into a weekly downtrend. So now it's up to the bulls. Can we reverse this process or not? A weak dollar is good and bad for certain situations. It's good for foreign investment into the United States overall, as other nations can then exchange their currencies for US stocks or US bonds. But so far, we have not seen that. We've seen a lot of money pour into US equities, but not so much into the bonds, guys. Yields still relatively high, right? The 10-year yield still at 4.37 and the 20-year yield still at about 4.9. Need to see some meaningful declines on those. Unfortunately, the Federal Reserve did not help us with that this week. Bonds overall, I still do maintain, as I have maintained for the last, 3 to 6 months at this point, I've maintained that it's a very decent buying opportunity, but that the buys need to be slow and calculated as the expansion probably not is going to be had before the third and fourth quarter of this year, and the expansion trade may be a little bit slower than people are anticipating. That being said, let's move into gold right now. Gold is a very decent asset in times of conflict. We can see the bulls right now have a gorgeous daily uptrend. We are coming in now, backtesting the 12, backtesting the 12 EMA, not quite backtesting the actual area of support, 33.12 down to 32.58, but you can argue that we are retesting some of the prior highs. This is the level that we're playing off of right now. It is looking good, guys. This is looking very good for a swing trade expansion long, possibly going into the 34 to 3,500 target. As a result, guys, the weekly timeframes too are looking very good. We had the bull flag consolidation. Now we're getting the actual leg of expansion on gold. I would not be surprised if in the next 2 weeks, central banks and institutions alike are still hedging the markets because of all the uncertainties right now, geopolitical conflicts, and tariffs concerns once again raised by the Federal Reserve. I would not be surprised if the directional bias of gold is to the upside, and the technicals do definitely support that expansion right now. And now lastly, moving into Bitcoin before we get into stocks, Bitcoin unfortunately unraveling right now. We know that it's a growth asset, and growth assets in a time of uncertainty, well, they're not the ones that perform the best. So they're testing the bottom end of support right now, 101,500. This is the first time since the rally started in April, guys, that we have lost the 50 EMA. Pay special attention to that in combination with your daily downtrend. And in combination as well with possible further weekly consolidation, the weekly higher low is here, 100,500 bucks, right? If we lose that, that is weekly downtrends. That would mean you're into monthly consolidation. Where could monthly consolidation take us, guys? Possibly the mid to low $90,000 range where all that consolidation was. It would still be a relatively healthy pullback, all things considered, just if we look at the higher timeframes, guys. I'm still a big fan of Bitcoin, but if we're looking to position a bit more heavier, the mid-90s seems to be a very good sweet spot. I do still expect this asset to be expanding in the next 1 to 2 years. However, we have to take calculated buys, right? Because we know right now, crypto overall has been moving roughly a lot slower than it had been earlier on in the year, right? Into the April-May session. Now consolidating with the rest of the markets as uncertainties continue to mount surrounding the tariffs, the trade deals, and the situation in the Middle East. With all that being said, guys, now let's jump into some of our stocks. And we're going to cover these big tech stocks quickly so that we can dive into the biggest gainers or the losers as well. And lastly, my portfolio. All right, so let's start off here with Apple. Apple up 2.25% on the Friday session, really going counter trend to a lot of its big tech counterparts. That being said, Apple was and has been in consolidation now for roughly the past 2 to 3 months. Clear areas of consolidation right now. 210 up to 221 is resistance, and below 196 to about 187 is support. Now, if we're trying to take a swing trade long here, going from level to level, very simple. Stop loss goes below this low at this point in 195. Your expansion target starts at about 211 up to about 215, which is the 200-day EMA, into our resistance range. Not a bad stock to be taking a swing trade on. As a matter of fact, I as well built a swing trade position on Apple down here, and we'll be looking to ride it into expansion or into stop loss territory. It's not a bad bet overall. It has been consolidating for a long time, getting very, very, very tight right here. The weekly MACD is seemingly pivoting a bit more bullish. So Apple, which is known as one of your more defensive tech stocks, if I can use those words in combination right, might just be poised for a little bit of a rally, but probably not expecting any expansion to the all-time highs anytime soon, as the valuation now is still a little bit stretched in this market. Moving on to AMD. AMD's been doing really well over the past few weeks, guys. Overall, we can see a very nice daily uptrend. It's been a daily uptrend for a while, but now we are rejecting from the top end of resistance, which is 132, extending all the way down to 120, which is also this green line, the 200-day EMA. So if AMD follows the path of other growth stocks in this market, we might just be looking for a bit of daily consolidation, and that could also be looking for a bit of weekly consolidation. It's been a very beautiful weekly uptrend, clipping into the top end of weekly resistance right now, and you can see this is the first time in a very long time, guys, that we've recaptured the 50 weekly EMA, which is this line right there, and we are trending above all the other shorter and even the 200-day EMA too. The yellow is the 12, the orange is the 26. It's looking quite good, guys. AMD has captured a lot of levels. That being said, if we drop anything above 107, looking for a weekly higher low. So if AMD drops and makes its way back down to this range right here, I will be looking to sell some puts with the volatility down in the lower 110, 115 range on AMD. If I can get below 110 on a big drop, no problem at all. I'll do that, as I do believe the valuation right now is still very manageable for AMD overall at about 125, currently sitting right under a 30 price to earnings on a forward basis. Still under a 1 peg, guys. This company is still very cheap regarding its growth prospects in the future, which I'll remind you, because of the data center expansion, looking great for EPS, looking great for revenue expansion into the future. Moving on to Amazon now. Amazon also rejecting from its own area of resistance. We've been paying attention to this one for the past 2 weeks, and I've been commenting, guys. 228 down to 218. That's a big zone for Amazon. We moved nicely into it. And now with overall market consolidation, the bulls just did not have it in the tank to start trying and claim this level. Daily downtrend is clear as day right now, which means we're into weekly consolidation. Where could that possibly take us? Well, this area down here. 203 down to about 195 is your next line of defense. Right? Big support area, and all the EMAs are sitting down there. That being said, the weekly bulls are still in control of this chart. So I am a big fan. If the stock moves a bit lower here, decent opportunity for some swing trade longs in that support range. But also, if we pull back into there, decent area to be writing some puts, guys, under the $200 range. I still love Amazon. It's one of my biggest positions across all my accounts. The valuation is looking pretty good for some expansion here into the next 2-3 years. Long-term portfolio becomes a buy once again down. It's not even bad here, but down here, definitely. And the next area for swing trades could be in that location as well. Moving on to Google right now, 3.59% to the downside, guys. There was a few news events that hit Google on the Friday session. Number one was a continuous antitrust lawsuit in the European Union for about $4.5 billion in fines. The lawsuit was first started in 2018, appealed in 2022, and now it appears Google is going to lose the appeal and have to pay $4.5 billion. Piece of news number two is that Apple was maybe moving on to Perplexity, still rumored right now. And news number three, we had news out of Turkey. I don't know if it's here right now, but Turkey as well investigating Google for ads in terms of whether or not they're being competitive in their ad landscape overall because of the tools that Google uses might deem to be anti-competitive. So 3 pieces of news on Friday resulted in Google once again being hit to the downside in arguably an unfair manner. That being said, following some of its other big tech peers, daily downtrend right now is clear as day. Did not quite make it up to the resistance range of 185 up to about 190, but that's fine. Google bulls, even though we are in a daily downtrend right now, we're into support. 170 down to 160 is the area that I really love playing this stock, guys. I'll be looking to write more. Well, I already have some short puts, but in the event that other people don't, writing some puts down here on Google 160 or below could be a very decent proposition. The bulls are still in control of this chart, looking for a weekly higher low at this point, anything above 150, looking for a weekly higher low. For possible further trend continuation, it's just been using this 170, 160 area to the best of its abilities, right? To kind of defend and try to accumulate and possibly try to expand. That being said, this one is now on my radar, guys, for leap call contracts. The valuation is now too cheap to ignore. Once again, I really do enjoy their prospects, but of course, it's not a stock that doesn't have any risk right now. I just believe that the reward possibly does outweigh the risk at this point, which is why I'm willing to put my money on the table and possibly go for some leap call contracts, because I do expect by the midpoint of 2027, Google should, in a very decent market, be trading in the low $200 range. 220, 230 would not be out of the question. And that could be some very profitable call option contracts with enough time on them, of course. Moving into Meta right now. Meta down 1.93% overall. And Meta 2, unfortunately, cannot break out of the 705 region. That being said, there's not much in terms of resistance here. That is really at the all-time highs, 740. And now we're looking for the breakdown below 680. Breakdown, they will join several other tech names in a daily downtrend and go into a leg of weekly consolidation. Good thing Meta has a lot of space for the weekly consolidation here, guys. Anything above 620, looking for a weekly higher low. Support stays put, 640 down about 619. If we retest the lower end of this, guys, might just be a candidate for some very juicy swing trade longs in the market. Valuation of Meta is right now not that bad. It's still one of my favorite stocks for the next 2, 3, 4 years of expansion. I'll just be looking to get a little bit of a better price. Moving on to Microsoft right now. Microsoft also, the bulls may be getting a little bit tired. One thing's for sure, if the whole market's consolidate, guys, Microsoft is probably not going to be able to keep it up forever at this current rate, right? That being said, the daily uptrend is monstrous right now, looking pretty good for some expansion, but the daily higher lows are close, 474 to be exact. Lose that and you might be heading into daily downtrend consolidation, and maybe even weekly consolidation too. Now, where can we possibly go, guys? Well, you might be targeting some of these highs, right? Which could also coincide with the 12 EMA curling up. Talking about 445 to about 455, that would not be a bad area for a next stop for Microsoft consolidation. It would look fairly natural on that chart. That being said, for a long-term portfolio, I'm not buying any shares of Microsoft up here, but I am holding every single share that I do have. The valuation right now is kind of at the top end of what Microsoft usually trades at. Any significant discounts might be worth to explore if we get some consolidation, might just be due for some swing trades in that area. Moving on to Netflix right now, 0.75% to the upside. Netflix not looking too bad, guys, right? We know that they had a nice daily uptrend right now. The bulls did a great job defending the lows right here at about 1175, and now they're looking to possibly push the boundaries again. However, if we were to break below this with consolidation in the markets, I'll remind you, what is Netflix looking to do? It looks exactly like Microsoft, right? Beautiful weekly uptrend, very extended, overbought conditions. If we do consolidate, I would not be surprised if the 1,150 to down to about 1,100 area is tested, as Netflix is desperately looking for some consolidation. The monthlies are very extended as well from the 12 EMA. Any consolidation would be very healthy in my opinion. Now, I'm not adding to any Netflix shares up here as it's the top end of its valuation right now, but I'm holding every single share that I do have. Phenomenal company, phenomenal free cash flow per share growth, phenomenal EPS growth. It's just you obviously have to be conscious of what you're paying for things sometimes, right? Moving on to NVIDIA right now. NVIDIA down 1.12%, and we can also clearly see that NVIDIA has now been struggling for 2 weeks, trying to crack above its all-time high range of resistance, 145 to 150, still unable to do so. And you can tell by these weekly candle closes, the bulls might be getting a little bit tired. If the overall markets consolidate, I do expect NVIDIA to consolidate too. Pay attention to 140.83. Lose this without any meaningful new highs. That is a daily downtrend, loss of the short-term momentum, and just going into weekly consolidation. The bulls have so much space on this chart, guys. On the weekly, anything above 95.5. Gonna be looking for weekly higher lows, possibly gain more momentum down here and try it again, right? So any dips down into 135 to 125, I will be looking for some swing trade longs to accumulate around the EMAs into support and possibly go for that momentum shift, possibly after the markets are done consolidating, and also selling some short puts in that area too. Fairly decent proposition. At the 140 range, NVIDIA's valuation is not bad. So at 135 to 125, it would just get meaningfully better, but it is not trading that expensive right now. Moving on to Tesla. Tesla actually up 0.03%, but Tesla for the most part, not doing much, right? Big consolidation range. Where have we seen these before, guys? Apologies, my lines were absolutely disastrous on that drawing right there. So let me actually use the straight line drawing tool, right? I'll remind you, this has happened a few times in the past. It happened once here, and the bulls were able to break it to the upside. It also happened once right there, and the bulls were able to break it to the upside as well. Will this be similar, guys? In my opinion, it all depends on the direction of the SPY and the QQQ. If the SPY and the QQQ take big consolidation candles, Tesla is probably not going to be able to keep it up on its own. So pay attention to the break either way, guys. A break to the upside will bring us right into resistance, 340 to 360. That's why I don't enjoy taking longs here, right? Even if you do get the break, you're running to resistance very shortly. If you get the break to the downside, breaking up 312, you're coming right back into support, 300 down to, I know, 260. It's a very wide range, but that is the entire level that Tesla has been holding either as, you know, resistance for the bears, but also support for the bulls. If Tesla revisits this range, that is maybe an area where you could view some swing trade longs as the rollout of the robo-taxis, guys. As a matter of fact, we're the 21st today. It's happening today. So probably going to see a lot of headlines for that on Tesla over the upcoming week. Curious to see how that is going to impact their stock price. Moving on to Palantir right now. Palantir also pulling back despite its status as a defense corporation. You would expect that this one would do well in times of conflict, which it has been, but it cannot go up green every single day in a row, right? That being said, the higher lows are right now still planted at about 133. If you do break the 133 area, you're possibly going to be looking at a bit of daily consolidation and possibly a bit of weekly consolidation as well. That being said, the bulls are in full control of this chart. It's a very nice weekly uptrend. So even if we do come back here, guys, support stays put at 125 to 117. Am I buying this one for my long-term portfolio? No, I already still have 400 shares, which, I mean, I had a lot more than that. As you guys know, if you've been following me on the channel for a while, we had them at about $11.80. We've rode them up so high, so high, so high. I'm keeping every share of Palantir that I still have. I've done all my selling. I've taken massive profits on this one. up here though, guys, even as a Palantir shareholder, we have to understand how much we are paying for this growth, and whether you measure in terms of price to earnings, PEG, or price to sales, you are paying a lot. That does not detract from how solid and how amazing of a company Palantir is, but you have to understand you're paying a lot for the growth overall. I still do believe the market cap can have some expansion, but right now they're pricing in a lot of that expansion that they would be having through 2030. Moving on to SOFI right now. SOFI down 1.04%, but SOFI had a phenomenal week. Look at this expansion leg by SOFI right now. Higher lows into the expansion leg and attacking more and more of this resistance range. 16 out of 14 is the mark, so keep that in mind. If we're looking for a pullback, anything above 14, going to be looking for a higher low, maybe to continuously attack this resistance range. However, if we unwind, I just want you guys to understand the bulls have put in a tremendous amount of work. The weekly higher lows are here, 1276. So even if the daily bulls lose this and follow the rest of the markets into consolidation, going to be looking for a higher low, anything above there, higher low to possibly attack the resistance range once again. At 15, the forward valuation is not that bad. If you look at the PEG ratio and you look at the price to sales, it's pretty decent for SOFI. Now, I'm not necessarily buying any shares here because I have already all my shares that I accumulated at the lower levels, both back here and a little bit during the sell-off too. However, if you are brand new to SOFI, I don't think it's a terrible place for a first position. Not financial advice, of course. That's just for me. But if we do consolidate again, I was saying for a while here in the $12 to $13 range that I do really like the stock. And if we drop a little bit more, I'll be selling more puts down here, guys. $13 to $12 for some more swing trades right now, but SOFI not looking too bad. Moving on to Uber before last, Uber up about 0.41%. Not the worst day for Uber, of course, on the Friday session, but the bulls having a bit of a lack of momentum right now, right? It was a daily downtrend. The bulls made a nice attempt at trying to engulf the move and unfortunately got shut down. Daily downtrend unfortunately still remains. That being said, we are still into weekly consolidation for Uber. If you break this candle right here, 82 with a weekly candle close, that is a weekly downtrend, and that is synonymous with a bit of monthly consolidation. Now, Uber's had a very nice rally, guys, from the low 60s all the way up to, the low 90s, which was a 57% move from bottom to top. Maybe they might be looking for consolidation. I do still think that any robo-taxi news out of Tesla or whatnot, people have made the connotation that any positive developments in robo-taxis is bad for Uber. I somewhat don't agree. That's going to be very far away, but I do also believe that Uber will be able to leverage its network and derive a lot of partnerships with various robo-taxi entities rather than it being a black and white scenario, whether it's it's either robo-taxis or Uber. I think it's going to be a combination of both for the foreseeable future. That being said, Uber for me, I like selling puts down here, guys. Anything below 78 on some further consolidation, decent area because that is support. And once again, as I said, we are just literally looking for a monthly higher low. Yeah, anything above 61, looking for a monthly higher low, come down into this previous resistance range, which is now support. Talking about that high 70s, decent area to start playing Uber stock. And the valuation here is not that commanding either. And now lastly, moving into TSM. So TSM down about 1.87 on the Friday session, following SMH, following NVIDIA. They did cut the lows here, guys. 209.45, right? No new highs and a lower low. That is the start of a daily downtrend. We are still into support right now, 211 down to 205. But if this one follows the market and loses the range, I want you guys to understand who's in control here. It is very clearly the bulls, right? Very, very, very clearly. Anything above 145, guys, looking for a weekly higher low for possible further trend continuation. So if we do have a few legs of consolidation in the markets and semiconductors take a hit, I'll be looking for some TSM re-entry opportunities down here. Low 190s, support 192 down to 184, the next zone. All the EMAs are sitting there as well. And this would look like a very natural move for TSM to make. The valuation, even at $200, is not that bad right now. It's actually cheap. So you can understand 190 down to 180 is going to be even cheaper. So swing trade longs, yes. And even maybe writing some puts down here in this area could be attractive. That's going to be an area that I'll be patiently waiting out for on TSM. If it doesn't get down there, there are many other companies that I can play as well. That is everything for your overall market rundown. Now let's dive into the biggest gainers and losers of the Friday session. If we take a look here at the list, we're going to go through the biggest losers of the day first. So we first got ALAB, 6.5% to the downside. ALAB is not a bad bet, guys, but need to get it a little bit lower. If we somehow revisit the $80 to $75 range, I could be tempted to take a bit of a swing trade position. I did this one after earnings and it did very well for us. We were able to expand into the 90 zone where I took some profits. In the event we lose this range because growth becomes unfavorable for a short time, I'll be looking down here, 80 down to $70, decent range. AAP11 as well, 5.71 to the downside. This is a very big sell-off on AAP11 overall, coming to support right now, 345 down about 305. Now, I've been very vocal about the valuation of this one at about 350. It's not that bad if you take in consideration the next year of growth. However, keep in mind that their EPS growth rate is going to be tapering down. That being said, we have to be a little bit careful what we pay for this one, right? But it is very clear to me that the bulls still do have the higher timeframes on this one. The weekly is not looking bad. The monthly timeframe is not looking bad too. If I had to play this one, guys, I might be looking to play it more around the 200-day EMA. If we get a breakdown below $300, that's where I get interested. If you couple that with some daily oversold conditions, I'll be looking for some possible patterns to be shifting, right? I need to see the bulls set an area of support, recapture the daily uptrend. Then you might get me interested, because then I would understand that the weekly consolidation leg is possibly finishing. But special shout out, we will see, can they keep this support range? If they do, give me another daily uptrend. I'll be taking the trade there and then possibly setting the stop below the lows. But as of right now, it is synonymous with a falling knife on the daily time frame. Symbotic, a beautiful robotics play company. I've been very vocal on this one as well. In the event that Symbotic pulls back in a meaningful fashion, I might be looking to sell some put options here in the mid $20 range. I like what they're doing in terms of robotics, in terms of production lines, and they have a very big contract with Walmart. On to ANET. ANET is a very solid data center play. We covered their earnings on the channel not too long ago in the month of May. We found that in the 80s range, they did have a fairly decent valuation for the amount of high return on capital employed and return on invested capital that they have, right? So the fundamental valuation in the mid 80s is not bad. What I'll be doing possibly in the next few days and possible few weeks is if I can find some short puts down here, guys, 80 and below, I would not mind playing this company. I think it's one of the best data center plays out there, just in terms of the amount of margins that they have, the free cash flow that they bring into, and just the overall, the overall degree at which engineers love working with their products in data center applications. Very strong company overall. Those are just a few of the names that were to the downside a lot. Special shout out to Louis Vuitton, man. Louis Vuitton has been coming down. This is one that's in my long-term portfolio. It's getting pretty cheap right now, guys, trading around 2.5 price to sales. This one has not done anything in the last almost 5 years at this point. They just filled the gap from the earnings here, November of 2020. That being said, guys, it's very, very cheap right now. They still have great margins. This one being lumped up as part of consumer discretionary. Look at all the price targets. They're now all above the current stock price. This is when I actually want to add a bit heavier to my long-term position. Look, we can actually see that EPS will be curling over as a result of that cyclicality, and revenue should be going back to expansion second half of this year into the next 2-3 years as well. So it might just be a decent time. I know this one has been an absolute dog. Many stocks have been absolute dogs in the consumer discretionary segment, right? This one might be worth a second look if you're looking for a high quality retailer that does have a very wide competitive advantage and a very wide moat overall. That is most of your loss leaders for the day. Now, some of the biggest gainers of the day, of course, Circle. Circle continuously printing gains for most people. 33% on the Wednesday session after Congress approval of the stablecoin bill. And thereafter, guys, we did have, or rather, and then the Friday session, 20% plus to the upside. Now, the market right now is $52.85 billion. I will remind you that in terms of the total assets that Circle does have under management, USD reserves right now is $61.63 billion. So if you are, there's a few ways to value this company, guys, but suffice to say, in terms of assets under their control, if that was the benchmark, then 60 billion, they're coming into target right now. But this company does generate a bunch of revenue on its own. They have very decent net margins, right? They're gonna generate about $2 billion in revenue over the upcoming year. So if you try to value this one on a more fundamental basis using price to sales or price to earnings, it's not gonna make sense, right? But if you're looking at how many assets they have and the amount of volume that they do overall too, they do so much, guys, in volume, $26 trillion in all-time volume here. They are almost going to be one of the largest players. The largest players is right now Tether, but they're the only publicly listed company. They're getting a lot of momentum. It's a bit tough to chase up here, but as I've been saying the few times where we get big pullbacks, this one is fairly juicy to write short puts under the market. At any meaningful pullbacks, guys, I'll be looking for pullbacks into some structured levels of support. On the 1 hour, there's not much right now. I need to see a bit more of a pullback here, possibly into the lower 200s to 180. It's very volatile. It can happen, right? Especially if crypto and growth kind of comes down. Very overbought right now. Tough to chase, but on a pullback, I might just be interested in this one too. CoreWeave, not same concept as Circle, but CoreWeave has been one of the hottest stocks over the course of the last 2 months as well. CoreWeave coming out of the bull flag territory we were identifying last week. Beautiful leg of expansion right now. For a momentum trade, guys, quite simply, if you pull back into the 160 to 150 range, looking for a higher low, with stop loss goes below there, 142, pull back into this zone right there. This is the sweet spot, 165 to 158, 12 EMA. It's been riding the heck out of this 12 EMA the entire time. If we had to position for a swing trade, that would be it. Stop loss would be quite wide, but then you'd be targeting expansion back to the highs, possibly to $200 if CoreWeave does not stop. It's all going based off of sentiment right now on this stock. BLDR, here's an interesting play. It goes in line with the home builder stocks that I was showing you guys earlier, trading below the 200 weekly moving average, which rarely has been the case. It's only happened a few times in the company's history, has always been a buying opportunity coming out of weekly oversold. Weekly MACD appears to want to cross right now, and the bulls are trying to go for some form of weekly upturn recapture. At the lower 120 range, the valuation is very cheap, but we know why this one has been down. Home builders have been coming down. New home constructions have been coming down, and the real estate market has been very slow overall. That being said, one could argue that if this is the type of stock that is interesting to you for a longer term swing trade or a long-term portfolio position, now might be an interesting time in support, into oversold conditions, into crossing of momentum. It might be a time to possibly explore positioning on this one. HIMS not looking bad as well, trying to attack overhead resistance right now at the $66 range. I like HIMS, guys. I like it a lot. Daily MACD is also crossing, but chasing up here, not the best proposition. We covered this one recently down here where I was saying the stop loss goes below the low if you're looking to trade it from level all the way up to the resistance range, and that if you were into this trade, the take profit zone especially is coming up right now shortly. But very good, guys. I have some shares on him from FIMS down here, 28. I'm going to hold this one, at least before taking any profits, to a $20 billion market cap. $20 billion is where a lot of people say this one should go, and the analysis is very simple, guys. It's all in terms of price to sales, right? So price to sales, if we're looking at forward sales for this year, 2.35. A lot of people feel that it should deserve a roughly 8 to 10 price to sales. That would be roughly 16, 17 to about $20 billion. I could see that happen as well. We'll see what happens there. Coinbase as well, not moving too bad. I'll remind you why Coinbase is moving because of the stablecoin news. Well, they are entitled to half of all of Circle's interest fees that Circle generates from its products. But also, they are also entitled to, whenever people trade USDC or stake USDC or whatnot on Coinbase's platform or borrow USDC, they are entitled to all USDC interest payments on their own respective platform, on the Coinbase platform, of course. So they are kind of taking a page out of Circle's book and rallying. The next area of defense here is about 332 up to 320. Very tough for me to position on Coinbase at the current time. And lastly, I'll cover a bit of Rocket Mortgage here. So Rocket Mortgage, you know, I've been talking to you guys about the home builders, right? There's two ways that you can play the housing market overall. If you guys want to see a bit of a recovery, rates coming down later in the year, this is the no recession scenario in which consumers regain buying power and start slowly igniting the real estate market once again over the next 1 to 2 years. This is my favorite play, but special shout out to the home builders as well. I started some call option positions here, leap call options. Right now it's moving well. Right? And the next area of resistance, of course, is roughly 16 down to about 15 bucks. Moving into that target right now, looking good. Bulls in control of the weekly expansion level. And Rocket Mortgage is doing beautiful things, acquiring companies such as Mr. Coop, which is one of the best mortgage companies out there in terms of online lending, and also acquiring a company like Redfin too, which shareholders just most recently approved the purchase, right? So they'll be acquiring those two companies, really consolidating themselves as one of the largest online players in the mortgage space. So I like Rocket. It's my preferred method of playing the whole housing market recapture rather than me buying Lennar or Toll Brothers or DR Horton or ITB or BLDR. Rocket Mortgage is actually my go-to play for this whole cycle in that niche overall. So that's a lot of the companies that I chose to cover today. Obviously, there's a lot more, but we'll try to cover as many of these as possible in every single video to make sure we cover a lot more than we usually do with just our usual big tech name rundown. I'm able to cover a lot more stocks in that fashion. So that's everything I had for you guys for the whole market rundown. Hopefully you enjoyed that. Now let's dive into my portfolio and some of the trades we made last week and what I have into my portfolio for next week too. All right, so since I haven't seen you guys since Monday, let's just recap some of the trades that I was able to take this week in the shortened trading week, only 4 days this week. I was also traveling back home, so I did not have that much time to trade. It was a bit of a light week for me, but here are some of the wins that we had. Apple, 192.5 puts on the wheel. We were able to make a very decent amount of money on those. These were mostly in the top 5 options videos, guys. So make sure you watch those top 5 videos that I put out on the Sunday because you'll have all the same plays that I'm looking at too. Shopify, $100 puts, expired pretty much, well, not expired. We closed them for a nice profit. Reddit as well made some good money there. The 105s for this Friday. Very good profit there. And SOXL, we wrote a 16.5 contract from 15 cents into worthless, so about 1% there as well. Shout out as well, I was telling you guys that on circle pullbacks, I like to play some short puts on this one. We made a trade this one, 125 puts for 65 cents, down about 15 cents overall. So not that many wheel trades. We did have one contract that got called away, which was SOFI. We've been in this one for a while, right? So we got called away at 13.5 with covered calls. Our cost basis was 10.94. That was $2.50 per share. Depending on the size of contracts that you had, that's very good money, right? It's about $256 per contract. So that being said, that was roughly 23.4% after being assigned, guys, on earnings Q1 at $16. Look at all of these covered calls. We did a DCA as well, assigned more shares at $11, more covered calls, and now we got called away here at 13.5. We made 23.4% ROI, which is about 1.17% per week for 20 weeks, guys. That's the minimum. My minimum ROI here is 0.5% per week. We were at over double that, so I'm very happy with that assignment. And now we are assigned absolutely 0 stocks. We have a bunch of buying power, but we do also have a bunch of long positions as well. Many of those are new entries to the portfolio. Let me show you just a few of them. So we open after the MasterCard declines, we open some call debit spreads, 560 to 565 strikes for $2.11, looking for some expansion. Throughout this week as well, we opened the Apple call debit spreads at the support range that I was talking to you guys about, right? This support range right there. So I did put my money where my mouth was, and we went for the 210, 215 October call debit spreads for $1.83. And another trade we did was Adobe, 430 to 435 strikes, October expiry as well, for $1.82. Adobe, I did enjoy their earnings. I think they've been unfairly hit. So we're going to try to play this support level and try to go for some expansion. I gave myself 3-4 months of time for that expansion to happen, as I do believe the valuation is very cheap right now on Adobe, cheaper than it's been in a long time. Their earnings were very good. This one just not being favorable in the markets overall. So where do I stand with all my positions? I'll give you guys 2 different views. Here's the position tracker with all the trades that we've made. You'll see that there's a few new wheel trade entries on the Friday session. Visa after the drop, June 27th, next Friday, 320 puts for $1.52. You can see those, that trade alert was sent off right here, this one. And then Google as well. Google, I went in early Thursday morning before all the news, guys. Sadly, the timing on that one was not the best. You can't predict the news, but I was happy with my strike, 170 strike into support for $1.11. We'll see if we get assigned on that on Friday, if Google's going to be my new assignment, or if Google will make its way back above 170 by the Friday close. I don't care either way, guys. That's why I write these options. If you want to take a look, guys, here are all the, take a screenshot, right? So we got called away on everything. These are the 2 new positions. We still have a bunch of call debit spreads as well, many of which are here with the price targets on the right-hand side. So take a screenshot of this if you want. If you want to see the account, how it's looking like, and all those spreads and the pricing, they're all right here. So as you can see, the Google contract, we have the Visa contract. Here are the call options I still have. Affirm is up nicely right now. KWeb is roughly break even. I'll probably add to this contract too, the 40 calls for January 2027. Rocket Mortgage, those calls are doing very well. We have one TLT batch of calls that's expiring worthless. We've had these since September. Hasn't played out. So I refired another one, $80 call for January 2027. That one is also underwater. We'll see what happens. I'm going to probably add another one to this list. And then we have XLV Leap as well, which is was decently in profit, but now with the pullback, is coming back to break even. The time on that is January 2027 too. Those are most of the call options that I have. Then we have a bunch of call debit spreads. Two of the longest dated ones are the Amazon December 2027s here, which are doing very well. We're up about $1,000 on those. And the Microns, the 80 versus 170 call debit spreads, December 2027 as well, we are up over 2x, about 140% on those Micron contracts, looking very good. All the other call debit spreads are short duration ones. You can see that some are not doing too well, such as the new Adobes. The GDs are actually nicely profitable right now, not by much, but okay. The MasterCard we just opened, the MSTRs, this was a play for Bitcoin expansion. It was a lottery trade, as I did label in the other page right here, which I can show you guys, right? Let me pull up my page. This was a lottery section trade overall. So this one right there, I have a few that are solid plays, but these are more risky lottery plays overall. MSTR, it was a nice gamble. It didn't work out. It is what it is. We still have about a month of time on those. We'll see what happens. The NVIDIAs, they're moving nicely. We're still up on those. We had 3 contracts. We're down to 2. The Pepsi's, a more defensive play all the way through September. We're down on those still. The PayPal's as well. We're down on a little bit. That was a swing trade I started about a week and a half ago. The markets pulled back. The QQQ is just a hedge for the markets overall. UNH was a trade that I took when UNH was declining. Unfortunately, they are now all but worthless. We've lost most of all our money there. So as you can see, guys, I show you guys the wins. I show you guys the losses. We have a ton of wins overall, right? The losses, some of them I'm maintaining here, but you can see from prior, guys, I mean, the number of wins, just scroll back here for the last, like 2-3 months of trading, right? The number of wins far outweighs the amount of losses overall, all things considered. So losses are normal. They are part of the game, of course. My job is to show you in all transparency where we stand with all the positions in the portfolio. So as you can see, I have a ton of longs, whether in pure calls or in combo calls using call debit spreads. Half of the portfolio, roughly, less than half, is longs, right? All longs, so I am positioned to the upside, but I do have a ton of buying power for the wheel every single week, which is a good place to be in. I have some longs if the market just runs and I can't find good wheel trade opportunities every week. I have some longs and I'm not chasing the market with the wheel. If the market pulls back and my longs start pulling back, I start using a ton of buying power going shopping for wheel trades, which is what I'm going to be looking to do in the next upcoming few weeks of time. So that is everything I had for that portfolio, but I do want to show you one other portfolio that I started with you guys on the channel in the month of March, and that is the small long-term portfolio that I've been building with you guys on YouTube, but also with my Discord members as well. We just added to the long-term portfolio here. I'll show it to you guys. Just give me a second. So here it is, essentially, with the new buys that we made on the Friday session here, guys. Here is the new mini long-term portfolio. Obviously, you guys know I've shown it on the channel. I have another long-term portfolio that's worth roughly about $500,000 right now. Doing pretty good, but I wanted to show you guys that during an episode of big market consolidation, February, March, April with the tariffs, it is okay to buy the dip on high quality companies, guys, especially at great prices. This one, since we started it, is now up 20.4%, largely beating out the S&P over the course of that same time frame. And here are some of the positions that we were able to build over the past few months since I started the portfolio. I will sort this by market value just so you guys see what the biggest positions are in the portfolio overall. Now, Amazon is still position number 1. Elf Beauty has made its way into position number 2, but we don't have the biggest cost on this. It's just the position right now is up like 88% because we have an average cost of $63. We also have some Google, which hasn't really moved much. We've added a bit more to that. Meta as well. We have a decent cost basis there. That one's up 13. AMD shares, we have a cost basis of 104. It's been performing well for us, 23%. American Express, TSM as well, decently sized position. Mercado Libre, another one of our good winners, 13% to the upside. Netflix, since we started that position, up 24. Microsoft, since we started that position at 385, also up 24%. Booking Holdings, one of our newest holdings that we added in the last 2-3 weeks worth of time. Not a very large position, but I will be building into it. That one is currently down about 2%. And then we have MasterCard, which is the newest position in the portfolio, which I did start on the Friday session. Now I realize that you guys can't see the numbers here. Here are the market values and the cost basis here overall. So Booking and MasterCard are my 2 newest positions. You'll see that on the Friday session, MasterCard was the newest position in the portfolio. And we did add $50 to Amazon and $50 to Google. I'll remind you, this is a portfolio that I started with $5,000 and I add about $300 every 2 weeks, which is roughly about $150 per week. It's to mimic people's average paychecks. It's to give you guys a good benchmark. I know that $300 might be a lot for some of you guys to put in with every single paycheck, but I try to take an average, right, of what people can do. Obviously, you can scale it up or down, but it just goes to show, right? I like to build portfolios by DCAing into the market with every paycheck. 10, 15% of your paychecks should be devoted to investing in your future self in your favorite companies or ETFs for the next 5, 10, 15, 20, 25 years plus, depending how long you have to go until retirement, of course, right? So this is how we proceed. Every 2 weeks, we are DCAing into the markets. This is the 6th overall DCA. I started with 5,000. This is now the 6th $300 DCA with a total buy-in price of around $7,000. And we are currently sitting on a decent amount of gains with the portfolio right now being right around 8,300 bucks right there, right? So decent performance. I'll continue to build this long-term portfolio with you guys on the channel for the entire course of the career that I have a YouTube channel, which is probably going to be a very long time. And I just want to reiterate, guys, that invest in your long-term future. That's why I always have 2 portfolios. One for my long-term investments that I do not touch. I'm in them for the long run through thick and thin in the markets. When the markets rally, well, we try to find some opportunities here and there to DCA into, of course, because not everything rallies at the same time. But when the markets pull back, that is when we really need to continuously buy into the markets and not be scared. We are investing for our long-term selves. 2 portfolios. One for the long term, and second is the trading account in which we try to outperform our long-term investments overall with very nice calculated trades and a very consistent strategy overall. So that's everything I had for you guys for today's video. That's everything. The recap of the whole market, the recap of my portfolio, and everything in between. Hopefully you guys enjoyed. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We'd love to have you back here. We do these now every Monday to Friday after the close, now that I'm back full-time in my home setup, right? And actually, after all, guys, if you have any questions whatsoever, please feel free to leave them down below in the comment section. I always love helping you guys out with whether that's with stocks, options, macro discussions, the economy, anything you guys want to discuss or ask me on is always fair game in the comment section. And last but not least, guys, if you guys are interested in joining our trading and investing community where we build these long-term portfolios for our future, but also trade the markets every single week, well, the link is down below in the description. You get access to all of my trades in real time, whether it's the wheel trades where we sell premium to the markets, whether it's the directional trades, the call options, the call debit spreads, the swing trades with shares and everything in between. You get access to all of it. So here's just a lot of the trades that we've been making over the course of the past couple of months here. Always very transparent with the wins and the losses. Most of the time, the wins largely outweigh the losses, but losses are part of the game, of course. My goal here is to be as transparent as possible. So you can join us with over 150, almost 200 other members trading and investing in the markets every single day, building good, long-term, consistent habits for long-term portfolios, but also consistent trading habits and applications of strategies there as well. You also get access to our private morning live streams, which I do every morning for about 2-3 hours at the open for about 2-3 hours, where I trade live and take all your questions on your stocks, your options, and your long-term portfolios. If you can't be there, they're always recorded. You can ask me all your questions in our chat rooms all throughout the day too. I'm always very fast to answer there as well. You get access to the private videos where I also show a lot of the trading strategies that I don't show so much on YouTube. Everything that I use for call options, whether they're leaps, call debit spreads, short-term strategies as well, how to grow an account from small, medium, or large, which portion of the account should be devoted to what strategy as well. Very important. Also give private videos on fundamental analysis, technical analysis, and so much more. Members find very good value in these videos. And lastly, you get access to all my watch lists and all my charts as well. It just comes as a package. It takes 5 seconds. You get to copy paste all of my watch lists and all of my charts. All the charts become yours. You get pretty much whenever you see resistance or support levels, you just copy it. Just everything comes copy pasted. And also what comes with that is all the fundamental analysis on like over 200 stocks that are on these charts as well. It's just an added bonus for our members. If anything like that sounds good to you, the link to join is down below in the description. Hopefully I see you in there soon. And if not, I'll see you guys right back here on the channel. So that's it for me today, guys. Hopefully you enjoyed. Did a bit of a longer recap because we didn't see each other all week, and there was a lot to talk about. But moving forward into next week, of course, I'll try to once again bring the videos back down to around that 40, 35, 40-minute mark, which seems to be the sweet spot for a lot of you guys. So thanks so much for spending the time watching this video. That's it for me. Have a great rest of your weekend, and I'll see you guys tomorrow for the top 5 options list video, which should be a juicy one considering the markets are consolidating right now. Take care, guys. Have a good one, and peace.